So if you've been following my channel for any period of time, you know that I am bullish on Gevo. It's no surprise. I have 340 shares in the stock, and I keep buying more as it drops below my cost basis. I made a bunch of videos. I have a whole playlist on Gevo, which you can watch up there. And I talk at length about, how bullish I am on the stock and how well I think it's going to do over the next 3 to 5 years. That being said, this is not a to the moon channel. And even on stocks I love, I do think that it is very important from time to time to take a look at some of the risk, at some of the things that could go wrong with this stock. And that's what we're going to do today. If you are one of those investors who can see, who think that Gevo can do no wrong, and you prefer to live in an echo chamber where you hear nothing but fantastic things about your favorite stock and you can't hear anything negative whatsoever, this is not the video for you. But for everyone else, let's go. So just like I did with the Hyliion video, we're going to start with the short-term stuff first, because the short-term stuff is stuff outside, I think that's outside of Gevo's control. Like we're talking stuff about for example, the financial, I guess the whole debt crisis that the government keeps finding itself in, like every freaking year. The government's about to run out of money and all that stuff. Same old story, and they want to fighting over the debt limit or whatever, and that's spilling over into emerging growth stocks. Now, I am calling Gevo an emerging growth stock for a reason, and it's an insulting reason too. We'll get into that in a second. But there's the infrastructure bill, which is also supposed to benefit emerging growth companies, which is, it's facing some troubles, and that's a problem. That's a problem for Gevo, as anything in the whole EV or renewable space is kind of dependent. Well, it would benefit or suffer greatly from the passes or non-passes of this infrastructure bill. And then there's the whole Fed tapering thing. Now, I mentioned this in the Hyliion video, but it's worth talking about again, just in case you skipped that one. So, last year, if you're familiar with the stock market at all since last year, you will remember that the stock market has, as far as the stock prices and all that stuff, has just gone up and up and up, despite the economy being terrible. And it was a weird moment, even weirder than now, in my opinion. Like, we had people just falling money into penny stocks left and right, stupid penny stocks like Galaxy, and because the price is going up. This kept going up no matter what happened in the economy itself. And part of the reason is because the Fed kept and still keeps, pouring money into the system. And it's been doing that since last year as a stimulus. And, well, the Fed is finally signaling that that's going to start coming to an end very, very soon. And now this is something that definitely has to happen, because I think the Fed's been tampering with the economy way too much, and that's not going to end anytime soon. But this is something that had to happen eventually, and it looks like it's about to start. And when that happens, that means that emerging growth companies like Gevo, and yes, I still consider Gevo an emerging growth company. We'll talk about that later. Companies that will rely on borrowing money. Once the tapering ends and Fed starts hiking up interest rates, that's going to be harder for Gevo to borrow money, because the interest rates are going to, raise up. And once that happens, all these emerging growth companies like Gevo, Hyliion, and stuff like that, in my opinion, are going to absolutely tank in the short term. Now, if you're bullish in a company, that might be your opportunity to load up. But I'm just saying, in a short term, these outside factors are going to devastate the stock, in my opinion. Now, I call Gevo an emerging growth company, despite it being public since 2011. And what do I mean by that? Well, I mean that as an insult. I definitely 100% do. Like, despite the stock being public for 10 years, like, it behaves like an emerging growth company. Like, I look through the history and stuff, and there's been a huge thing of, like, for example, there's an article from 2013 talking about delays of the Laverna facility. Now this is ancient history. Like, we all know the facility is online and making money now, but we're talking about delays, production delays, a bunch of bad management decisions. And this right here will tell you everything you need to know. Let me zoom in on this a little bit. So Gevo has had in its history 3 reverse stock splits. And that's not something you do when the stock's doing well. That's something that you do in order to stay on the NASDAQ in the first place. Because if it weren't for that, Gevo would be well in the penny stock territory right now. At 3 reverse splits. And these weren't like minor splits. We're talking a 1 for 15 reverse split. We're talking a 1 for 20. And then we're talking another 1 for 20. That's 3. That is not good. And as a matter of fact, like the stock price of Gevo for the last 10 years has been so bad that if you bought $10,000 worth of Gevo shares a year ago, 10 years ago to this day, right now you would have $1.95. That's how bad it is right now. Like, for example, if you go here, if you go to the statistics, you will see that Gevo is fairly heavily shorted. We're talking like 16-17% shorted. Now, I will have to give it, as much as I disagree right now, I do have to at least understand where all these, shorters are coming from, because over the past year, the stock has performed like crap, and so has their finances, to be perfectly honest. So anyone who's shorting the stock, like, I don't agree with them, but I also can't be mad at them. I see where they're coming from. And as a matter of fact, when I was looking at Gevo earlier this year, late last year, I was not planning on buying the stock either, because the finances and all that stuff, the valuations, excuse my French, but it looked like shit. Like, this company performed like crap over the past 10 years. Why would I be invested in this? And if I didn't see the take-or-pay contracts, all that stuff that's locked in place now, I wouldn't be invested in it right now. Now, if you're wondering why I'm focusing on the past in a video where I'm talking about what could go wrong in Gevo in the future, well, I mean, I think it bleeds in, and you'll see what I mean in a bit. Now, before I get to my point, I do need to give Gevo credit where credit is due, because it's part of my point in the end. But I do need to give Gevo credit here. Over the past year or so, at least as far as my perception and my opinion, I think Gevo has turned itself around a lot. Now, I said at the beginning that if it wasn't for the take-or-pay contracts, I wouldn't be in Gevo. But the take-or-pay contracts do exist. Like, we're talking $20 billion on the table, $16 billion confirmed, and we're talking big-name customers. And this is just in its latest 10Q. There have been some great developments since. It's made deals with big names like Chevron. It's made deals with big names like BP as far as its renewable natural gas. Like, there is a bunch of money on the table, and all Gevo has to do is perform its end of the bargain. And that right there is my biggest bullish case, and also in my opinion, my biggest risk. And I think my only risk with Gevo. And that's why I talked about their past earlier. All the delays and the reverse stock splits and their lack of performance is that, yeah, all Gevo has to do is hold up their end of the bargain. But they have to hold up their end of the bargain. And if the last decade is any evidence, that might not, I mean, there's a risk that might not happen. There may be delays, there may be other stuff, and we don't know. I haven't really read the details of those contracts, all those take-or-pay contracts and all that stuff. Like, we don't know what happens if there are delays, like significant delays. Do the contracts get renegotiated? Do they get canceled? Like, what happens if Gevo starts, falling on their end of the bargain, and those contracts get lessened or canceled? Like, that's going to be a huge psychological factor. That's going to be a huge hit of finances, and all the, I'm pretty sure a lot of people invested in Gevo are there for the 2024 money, and probably for the 2022 money when the RNG plant goes online. Now, as an investor, I have a lot of shares in Gevo. Like, I don't think that's going to happen. Gevo's performance over the past year, nothing I've seen would have me to doubt that's going to happen. But I gotta say, I mean, that is something that we have to consider going forward as far as, the risk for Gevo in the next couple of years. Like, Gevo has to hold up their end of the bargain. Now, honestly, having said that, that's my only, real big risk with Gevo. I mean, as far as comparing Gevo to Hyliion, I think Gevo is a lot more stable. Like, as a matter of fact, they have revenue for starters, and they have been around a lot. But I mean, one negative thing that Gevo has that Hyliion doesn't have is a decade of screwing up. Now, maybe not a whole decade of screwing up, but definitely, I guess we can agree on a decade of misfortune. We'll put it like that. But that's it, guys. Take care, have a great day, and eat your vegetables.